Did you ever wonder why some people seem to have a natural knack for handling money while others struggle? Let's start today's discussion. Our topic today is one that's shrouded in a cloud of mystery, often misunderstood, yet incredibly crucial to our everyday lives. Personal finance management. It's like a jigsaw puzzle with too many pieces, and for many of us the image on the box is blurred. It's complex, it's intricate, and above all, it's unique to each individual. Navigating the choppy seas of personal finance can be daunting, from understanding the importance of saving, investing, and spending wisely, to grasping the power of compounding, the role of luck and risk, and the virtue of patience. It's a lot to take in. But here's the good news. Today we're going to unravel some of these complexities together. We're going to dive deep into the secrets of money management that most people are unaware of, and guess who's going to guide us on this journey? It's none other than Morgan Housel. For those of you who might not know, Morgan Housel is a partner at the Collaborative Fund and a former columnist at the Motley Fool and the Wall Street Journal. His unique insights and perspectives on finance, combined with his ability to break down complex financial concepts into simple, digestible ideas, have earned him a place among the top financial minds of our time. Housel has a gift for making the world of finance accessible, interesting, and above all, practical. His approach is grounded in understanding the psychology of money, the importance of saving, the distinction between investing and speculating, the power of compounding, the role of luck and risk, and why patience is indeed a virtue in the world of finance. And so, as we embark on this enlightening journey, it's important to remember that the world of finance isn't as scary as it seems. It's a puzzle, yes, but it's one that can be solved with the right guidance and understanding. So let's dive into the secrets that financial experts, including Morgan Housel, know about money that most people don't. Money is not just about numbers, it's about psychology too. Let's dive into the mind of Morgan Housel, a financial expert who fervently believes in the crucial role psychology plays in our financial lives. He posits that the way we think about money, our mindset, our beliefs, our biases, dictates our financial decisions, perhaps even more than the actual numbers involved. Think about it. Have you ever made a purchase you didn't need purely out of emotion? Or maybe you've clung onto a failing investment, fueled by hope rather than logic. These are instances where our psychology governs our monetary choices, not our financial knowledge. Housel argues that emotional intelligence is just as vital as financial literacy, if not more so, in managing our money. Understanding our own feelings, motivations, and biases can help us make better financial decisions. It's not just about how much you know about stocks, bonds, or real estate. It's about understanding why you want to invest in them in the first place, how you'll react if they lose value, and whether you can maintain discipline in the face of market volatility. Consider this. Two individuals could have the exact same financial knowledge, the same resources, even the same opportunities. Yet their financial outcomes could be dramatically different. Why? Because their emotional responses to money, their psychological relationship with it, can vary greatly. This isn't to say that financial knowledge isn't important. Of course it is. But it's only one piece of the puzzle. The other piece is understanding your own mind, your own emotions, and how they play into your financial decisions. In essence, Housel's perspective invites us to look inward, to examine our emotional reactions to money, and to understand how our mindset shapes our financial journey. It's a call to be more self-aware, more introspective, and ultimately, more financially savvy. So, the first secret about money is that it's not all about math, it's about your mindset. We've all heard that saving is important, but just how critical is it to our financial health? Well, according to Morgan Housel, it's not just critical, it's fundamental. Saving, he argues, is the cornerstone of financial security, the foundation upon which all other financial decisions are made. Without savings, you're always living on the edge, always just one unexpected bill or sudden expense away from financial catastrophe. But saving isn't just about avoiding disaster. It's also about creating opportunities. When you have savings, you have options. You have the freedom to take risks, to invest in your future, to pursue your passions and dreams. You're not just surviving, you're thriving. Housel often talks about the concept of financial freedom. This isn't about being rich or having a certain amount of money in the bank. It's about having control over your financial life. It's about being able to make decisions based on what's best for you, not what's best for your bank account. And the only way to achieve this kind of freedom, this kind of control, is through saving. Saving also gives you the ability to take advantage of opportunities when they arise. Maybe it's a once-in-a-lifetime investment opportunity, or maybe it's the chance to take a lower-paying job that you love. Whatever it is, if you have savings, you have the flexibility to seize these opportunities. But saving isn't easy. It requires discipline, patience, and a willingness to delay gratification. It's a skill, an art even, that needs to be cultivated and practiced. Housel's advice? Start small. Even a little bit of savings can go a long way, and remember, it's not just about the amount you save, but also about the habit of saving. It's about making saving a regular part of your financial routine, something that you do consistently and conscientiously. And so we come to the conclusion that the second secret to financial success is not a secret at all. It's something we all know but often overlook in our pursuit of wealth and success. It's the art of saving. Hence, the second secret to financial success is the art of saving. Now, let's talk about investing, or should we say speculating. Imagine two people. One is a cautious planner, the other a daring risk-taker. The planner places his money in a diversified portfolio, understanding that steady growth over time is the key to wealth. The risk-taker, on the other hand, throws all his eggs into one basket, hoping for a quick windfall. This, in essence, is the difference between investing and speculating. Morgan Housel, a renowned financial expert, often emphasizes this stark difference. He likens investing to planting a seed and patiently waiting for it to grow into a tree. It's a long-term commitment where you put your money into assets that generate steady returns over time. You analyze, you plan, you diversify. It's a game of patience and consistency. Speculating, in contrast, is more akin to betting on a horse race. You put your money on a high-risk, high-reward venture, hoping it will pay off big. It's about quick profits, often driven by market rumors or trends. It's exciting, it's risky, and it's unpredictable. The risks and potential rewards of each are as different as the approaches themselves. Investment is generally safer, offering modest but consistent returns. Speculation can yield massive gains, but it can also lead to devastating losses. It's like comparing a slow and steady tortoise to a swift but reckless hare. Understanding the difference between investing and speculating is crucial to financial success. If you're looking for stability and long-term growth, investing is your game. But if you're willing to take on more risk for the potential of higher returns, speculating might be more your style. However, it's important to remember that speculating should not form the backbone of your financial strategy. It's more of a side gamble, a small part of your portfolio that you're willing to risk for the chance of a big payoff. In the end, knowing whether you're an investor or a speculator, a tortoise or a hare, can help you make better financial decisions and pave your path to financial success. So, the third secret is knowing the difference between investing and speculating. Have you ever heard of the magic of compounding? It's like a spell that quietly works in the background, gradually transforming your small savings into a mountain of wealth. Imagine if you could plant a tiny seed today, and over time that seed could grow into a massive tree. Now, picture this in the context of your finances. The seed represents your initial investment, and the tree signifies the wealth you can accumulate over time. This is the power of compounding. But what exactly is compounding? In simple terms, it's the process where the returns on your investments start earning returns of their own. It's like a snowball rolling down a hill. It starts small, but as it rolls, it collects more snow and grows bigger. The longer it rolls, the larger it becomes. The power of compounding is not about getting rich quick. This is a long-term game, and patience is key. The real magic happens over decades, not days or months. Let's consider an example. Say you invest $1,000 at an interest rate of 5% annually. After the first year, you'll earn $50 in interest, but instead of spending that $50, you leave it in your investment. In the second year, you're not just earning interest on your initial $1,000, but also on the $50 of interest from the first year. That's the magic of compounding. Now you might think, that's just a few dollars more. True, but remember our snowball? Just as it starts small and grows bigger over time, the same happens with your investment. It may seem slow at first, but give it time, and you'll see your wealth grow exponentially. The financial world is filled with stories of individuals who understood this concept and used it to their advantage. They didn't have to be financial wizards or have high-paying jobs. They just needed patience and the understanding of this powerful financial principle. The fourth secret to financial success is understanding and leveraging the power of compounding. Harness this magic and watch your wealth grow. Now let's talk about two factors that we often overlook: luck and risk. Morgan Housel, an acclaimed financial writer, has some interesting viewpoints on the role of luck and risk in personal finance. He posits that luck and risk are two sides of the same coin, yet we often fail to acknowledge their presence in our financial decisions. Let's start with luck. It's a fascinating concept, isn't it? We often attribute our successes to our skills and hard work, but how often do we consider the role of luck? Housel contends that luck plays a significant part in our financial outcomes. The year you were born, the country you live in, the opportunities that come your way, these are all elements of luck that can dramatically shape our financial trajectories. On the other side of the coin, we have risk. Risk, like luck, is ever present in our financial journey. Yet, we often underestimate its impact. According to Housel, risk is what happens when you make decisions without fully understanding the potential outcomes. It's buying a stock based on a hot tip without understanding the company's fundamentals. It's investing in real estate without considering market trends. It's taking on debt without a clear plan for repayment. These decisions carry inherent risk that can derail your financial journey. So how can understanding luck and risk help us make better financial decisions? Housel suggests that acknowledging the role of these factors can lead to a more balanced approach to personal finance. It can help us recognize that while we can control our actions, we can't control all the outcomes. It encourages us to take calculated risks, to diversify our investments, and to plan for the unexpected. By understanding the roles of luck and risk, we can better navigate the unpredictable world of personal finance. We can learn to celebrate our successes without becoming overconfident and face our failures without losing heart. The fifth secret is acknowledging the roles of luck and risk in our financial journey. Finally, let's discuss the importance of patience in personal finance. Indeed, we've all heard the old adage, patience is a virtue. But have you ever considered how this timeless wisdom applies to your financial journey? Morgan Housel, a renowned financial expert, heavily emphasizes the importance of patience in the realms of investing and saving. Patience, in essence, is the ability to wait for something without frustration, even when it takes longer than expected. In the world of personal finance, it's the ability to withstand the allure of immediate gratification in favor of a more substantial reward in the future. It's about understanding that the road to financial success is a marathon, not a sprint. When we dive into the world of investing, patience takes center stage. Every seasoned investor knows that the stock market is a roller coaster ride. There are highs and lows, and it's easy to get caught up in the moment. But remember, the real winners in this game are those who can weather the storm. Those who can remain patient during the lows and resist the temptation to cash out during the highs. Similarly, when it comes to saving, patience is equally pivotal. It's tempting to spend your hard-earned money on things that provide instant joy, but the real magic happens when you're patient enough to let your savings grow over time. It's about understanding that the small sacrifices you make today can lead to a much more comfortable and secure tomorrow. But why is patience such a key differentiator in achieving financial success? It's simple. Patience allows you to capitalize on the power of compounding. It helps you avoid rash decisions driven by market volatility. And most importantly, it gives you the peace of mind to stay the course, even when the going gets tough. So, as we wrap up this segment, let's not forget the words of Morgan Housel. The ability to do nothing when others are losing their mind is a superpower. The sixth and final secret to financial success, according to Morgan Housel, is patience. Remember, Rome wasn't built in a day, and your wealth won't be either. So, there we have it. 6 secrets about money management that financial experts know. We've delved into the intriguing money puzzle, explored the role of psychology in our financial decisions, and stressed the critical importance of saving. We've demystified the often blurred line between investing and speculating, and highlighted the incredible power of compounding. We have also underscored the role of luck and risk in shaping our financial fortunes, and reminded ourselves of the virtue of patience in the world of finance. These concepts are fundamental to effective personal finance management. And while they may not be plastered on the front page of every financial magazine or website, they form the backbone of sound money management. So, let's not underestimate their power. With these keys in hand, you're now better equipped to unlock the door to your financial success. Thanks for joining us today, and remember, knowledge is power when it comes to managing your money.